Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 4th of September 2024. I'm Michael Thompson. Every afternoon, we've got the 5 stories that happened today that you need to know about, so let's get going. Story number 1, the S&P ASX 200 closed down 1.9% today to 7,951 points in one of the worst days of trading in weeks, following a major sell-off on Wall Street overnight amid soft US economic data. It also followed domestic data here at home, showing that the economy only grew 0.2% in the June quarter. In terms of sectors, well, everything was in the red. Utilities and industrials were down the least. Gold, resources and energy sustained some of the biggest drops amid global fears about commodity supply. One of the worst performers was Fortescue Metals, which was trading ex-dividend and ended the day down 8.5%. De Grey Mining, Paladin, Liontown and Gold Road Resources all had sharp losses. Mineral exploration company Deep Yellow, which has a focus on uranium, was among those suffering the steepest losses. Shares in that company fell more than 8%. Among the best on the bourse was can and bottle maker Aurora, which climbed 7.2%. It announced a plan to sell its American packaging arm in a deal worth almost $1.8 billion. On to story number 2 now, and the Future Fund has posted a 9.1% annual return, or about $18.8 billion worth for the year to 30 June. It's a result the Future Fund is calling very strong. Given the rocky domestic and global economies, the total value of the Future Fund is now $224.9 billion, a new record, and its 10-year returns have well exceeded its mandate, which is to achieve a return of CPI plus at least 4 to 5% on top. Now, what is particularly interesting, though, is the comments made by new chair Greg Combet, who took over from Peter Costello in June. His comments alongside the results were that the energy transition promises plenty of opportunities for the Future Fund and investors, so it's going to be very interesting to see where he takes the opportunity next. Story number 3, a new analysis by Citi has found there's only one profitable lithium mine in Australia, Greenbushes in WA. That's out of the 7 operating locally. Greenbushes, which is 49% owned by Albemarle, is the biggest in the world, and it's the only one in Australia that is able to make a profit at current lithium prices. The Citi analysis used a gold mining type analysis to find a break-even figure and then assess that with current lithium prices. It's a pretty significant finding, given that lithium is a critical battery component as part of the energy transition. Story number 4, thousands of private businesses across Australia are defaulting on tax debts, leading to many failing. This is according to new data from Creditor Watch. About 34% of those with a $100,000 tax debt that they are 90 days behind on have either chosen to close or have become insolvent. That's about 7,000 businesses. The tax office has started ramping up action against those who are failing to repay tax debts after a long period of relaxed rules during the pandemic, and that is seeing lots of businesses come unstuck, especially amid what are a number of current economic challenges. And finally, story number 5, China has announced that it will launch an anti-dumping investigation into Canada's canola exports. Canada is introducing new tariffs on Chinese EVs, and this has gone down badly with its trading partner. China has now announced an anti-dumping probe into Canadian canola and is looking at Canadian chemical products too. China's Commerce Ministry said it, quote, opposes the discriminatory unilateral restrictive measures taken against its products. This is a very big deal for Canada's canola industry, as China is the biggest global importer of the oil. That's it for the afternoon report for Wednesday, the 4th of September 2024. I'll be back tomorrow morning with the Thursday edition of Fear and Greed. I'm Michael Thompson. Enjoy your evening.